Anyway, then our, now we want to talk to you about the impact of these psychological biases on investment performance, and particularly how having these, any of these different kinds of investor biases, emotional or cognitive biases, can give you suboptimal performance in your investments. And Jesse's got some case study, or a case study to show you.
Well, there's this company called Dalbar, and basically they do studies every year, and they have for a super long time. Like this one has been going on for 30 years, where they compare the average investor who's investing their own portfolio for themselves. They compare their performance every year with the performance of the S&P 500 index, the 500 largest companies on the New York Stock Exchange. And they just compare and see, how the average person investing their own money does just in comparison to this index of companies. And consistently, on a consistent basis, the average investor loses just compared to the index. And a big reason for that, the main reason for that, is because of all these different investor biases that cause people to buy and sell and make investment decisions at the wrong time and for the wrong reasons.
Right.
And so, as you can see on this chart, the average equity fund investor over the last 30-year period, this is ending in 2022. I didn't find a chart that ended in 2023, but the situation is the same. The S&P 500 greatly beat the average equity fund investor in 2023. But the average investor did about 6.81% over that 30-year period.
Per year.
Per year. In the S&P 500 did about 9.65%. It's almost a 3% difference. And you think that's really not that big of a deal. It's only 3%.
It's a big difference.
Over a long period of time, if you look there on the bottom, that's almost twice as much money the S&P 500 made in comparison to the average investor. That's
showing that the average investor doing it on their own over that 30-year period, $100,000 would grow to $721,000. That seems nice. But they could have had double that if they weren't investing on their own and had just stuck it in the S&P 500 and left it alone.
Index fund.
Yeah.
Right.